Well, it's a very good morning from him, and of course, it's a very good morning from me. Welcome to my mortgage live stream. I hope you're all well. Hope you've had a great weekend because the sun was shining all weekend. Actually, it was really quite warm and lovely, wasn't it? So maybe the summer has arrived. But yeah, it's funny, isn't it? We all talk about the weather, don't we? But I was doing some work abroad actually last week, and a lot of people talk about the weather abroad as well. So anyway, enough of that. Let's go on air because we should do, of course. Got a couple of technical updates for you today on underwriting, actually, and claiming on life assurance policies. We're doing a lot of work on protection recently. And I've got a couple of little sales ideas to help you, boosting your sales efficiency, making you better at time, of course. And then I've got 5 insights to share with you that I've thought about over the last few months, actually, that will be changing the way our industry is working moving forward. So I hope you're good. Hope you're well. Hope you're enjoying your summer. Maybe you've got some time off coming up. Kids breaking up in a couple of weeks' time, aren't they? Maybe you got some family time organised. So it'll be lovely for you as well. Anyway, let's get on to our first topic, which takes a look at mortgage or life assurance, I should say, underwriting. In other words, once you've submitted an application, what actually happens? So it's designed for people doing CMAPs, of course, and all those good things. So let's head over to our whiteboard across here, and we'll catch up on this topic with you. So let's just pop across here and make sure all is fine working. Right, title already started, life assurance and underwriting. Now, when we talk about underwriting, these are things that go on afterwards, of course. So you would have completed the proposal form. The proposal form itself is a really important aspect because that's, let's put in there, that's the contract, if you like. You're submitting a contract to the insurance company to take out some life cover. Now, the proposal form's all done online now, of course. It's all submitted via typing, etc. Gone are the days when you'd fill in a form by hand. Anyway, once the proposal form has gone off, then the life insurance company needs to start underwriting. Now, the proposal form does include lots of questions in there which help with the underwriting, of course, because in there you've got things around the person's health. That's important. You've got hobbies and interests or dangerous jobs will come out in the proposal form as well. They talk about that. Obviously, occupation as well, let's put it in there, will come out in the proposal form, the type of job that you do. Family history is another one. It's a big one, that family history. Family history of people's illnesses, because a lot of illnesses, of course, are connected to family. So quite a lot of information the insurance company is gathering from the proposal form, as you can appreciate. Now, the person that receives it, or computer that receives it, will then scan through the information. And if all is fine and the person's of a certain age, etc., they will submit it under normal terms. And therefore, the premium you quote will be the one that the customer gets charged. But there are some other issues here about underwriting, because sometimes they need to take it to the next stage. Now, you may have come across the phrase moratorium. We do give things awful names, don't we, in our sector? Moratorium, underwriting. A moratorium is where they don't actually underwrite on the point of sale. They wait for you to make a claim and then they underwrite it, which seems a bit odd there, but it speeds things along. And often what moratorium does is it excludes pre-existing conditions that the customer had on claim. But a lot of debate's done, of course, once the claim's made, which is not ideal. So you really do want to have it done and dusted. Now, if it's a group scheme, let's just squeeze that down there for you. If you're doing group underwriting or group life assurance, then again, they have free cover. In other words, they don't do underwriting for certain amounts of cover, which is good, of course, for people who are not so well. But for personal underwriting, of course, they're going to do some more investigation. And that's the next point, you see, because you've got a couple of things going on here. You've got health is the big one. Now, once health is declared and somebody's history of health is declared, then the insurance company might want to take some further steps. And the first thing they'll want to do is to get more information, maybe from the GP. They might ask for a GP report. Now, general practitioners, GPs, surgeries are so busy now. This is a real time dragger because doctors haven't got time to do reports. It's often done to the people within the surgery, and there's usually a time scale involved there as well. Don't forget your access to medical reports. In other words, the client has the ability to see that doctor's report before it goes to the insurance company, so that needs to be ticked off accordingly. Now, the GP report will give information about the patient, if you like, and what kind of medical situation they're in. It may be required, though, that the further investigation is needed. And in that situation, then, the insurance company will want a full-blown medical. Now, the medicals are not carried out by doctors so much now. They often use paramedical companies, paramedicals, trained doctors, nurses who work for another firm, who will rock up at your workplace or in your home and carry out a medical. I had this with my life assurance, which I applied for a couple of years ago because of my age. And this very, very nice lady turned up and she did all the medical in the comfort of my own home. So that was great as well. So what did she do? Well, she obviously did all the blood tests, etc. Took some saliva, which is used to confirm a number of issues. Of course, smoking, that sort of thing as well comes into it. And that goes back to the insurance company in order to make their decision. Now, that's the health side of things as well. There are many other aspects they will consider. Rather than a full report, they might ask for further information. Let's just squeeze that in for you. So the medical side of things is great, but before they go to the expense of GP reports and medicals and things, they might actually ask for further information to be conducted by the client. Of course, as a mortgage advisor, protection advisor, you need to be ready for that as well. And you need to preempt that kind of stuff happening and get the forms out early as well. So that's often used before they go to the expense, of course. Now, pursuits and hobbies and things, again, they might ask for further information on these as well, particularly if something's quite dangerous. Scuba diving is one example. They might ask for further information about how deep the person dives, that's something. Or are they part of a club? That would come into things as well. And family history, they might ask for more information. I had a phone call once. I applied for some life assurance once with AXA years ago. And they asked questions in the proposal form about my parents. And they phoned me up and asked me further questions about my mum, which was quite disconcerting. I remember that. But that's how they rolled at the time. Now, once they've made their decision based upon all of this information, of course, it's underwriting, they will then make their decision about accepting you under normal terms, or they may decide to load your premium. In other words, a percentage increase, possibly, called a loading, or they might exclude something. They might exclude, for example, your hobbies causing you to die, for example. They might have exclusions around that. They might limit your cover, for example, if it's too much. They might limit the age that they're willing to take you to. They might exclude some of the riders, the normal, the kind of ability to extend your cover without further medical evidence. They might limit those as well. But typically they might come back with a higher premium, which you then have to go back to your client and let them know what the situation is. So that's a quick update there for you on underwriting. Great. Okay. Just updating you there on a few issues there. You might have come across that. Now, let's get on to the subject of claiming now, because that's underwriting. Let's pop across to this whiteboard then, and we're going to talk about claims now as well. Let's make sure we're over here on this whiteboard. Life assurance and making claims. Now, quite a lot of technical stuff going on here, so I want to talk to you about that. Now, when somebody makes a claim on a life assurance policy, it needs to be done quickly and efficiently. Because obvious, really, isn't it? Think about it. Now, of course, the end of a life policy will come down. You might have maturity, for example. The policy itself might actually maturity as opposed to a death claim, if you like. And on maturity, of course, the policy will pay out. And what's required there is the document needs to be produced in order to receive the claim. Now, sort of maturity, you might find that the concept of surrendering. So if the plan's got money in it, like an endowment or whole of life, people can sometimes surrender the plan, which has a similar effect. Or, of course, you would have come across the phrase paid up. In other words, they are not going to surrender the plan. They're going to stop paying premiums, and whatever's in the policy will carry on growing or not. That's what they call paid up. But most of the time I want to talk about dying and death and stuff like that. So I'm going to talk about a death claim. So let's put that over here for you. Let's just put my little death emblem then. So somebody's died and there's a life policy involved here. So let's just put the policy in there. Yeah. A life policy involved. So what happens when somebody dies? Well, typically It will come through a personal representative, it might come through an executor, or it might come through a solicitor, depending who's dealing with the death. And these people will submit a claim to the insurance company. Now, the insurance company will want to know the date of death, and they'll want to have proof of death, and I'll come on to that in a second as well. And they also need to have what's called age admitted. In other words, they need to see evidence of the person's age. Now, age admitted is quite an important concept, actually. So, obviously, this is going to make the claims going to go through, as I mentioned to you there. Age admitted can be done beforehand. It's best to do that. All you're doing is you're providing evidence of the person's date of birth through the birth certificate. And this is given to the insurance company, and they can then admit the age on their records, and it won't need to be done at that point. Now, obviously, the maturity claim, the death claim will require the evidence of the policy. Do people have policy documents anymore? I don't know. I think I've got a policy document, but often these things are all done online now, aren't they? So it needs to have evidence that you own the policy effectively, or the person who's died owns the policy. Now, claiming, of course, is rife for fraud. And insurance companies, of course, will want to know details about the person's death. Of course they will. And they'll look for any prospect of fraud, or if there's a police investigation going on as well. Now, I read at the weekend quite a sad article about some potential fraud that was talked about. So let me share this with you on the screen for you, because you might be interested in this. Actually, here we are. This is the article: "Husband paid for wife's life assurance and killed her." It's quite a terrible story, really. Let's zoom in for you. It's a mortgage broker, oddly enough, who was £300,000 in debt with insurance companies. And during his divorce, of course, paid for his wife's life insurance policy before killing her. Now, of course, it's fraud and fraud. If you're going to do fraud, you need to make it a bit better than this, really. And it turned out that this chap had a large life assurance policy of £450,000, as you can see, but he had a surging mountain of debt. And he basically murdered his wife and then decided to claim on the life insurance policy. He even said to the people he owed the money, hold on there, I'm coming into some money next week. So you can't make this sort of thing up, really, which is incredible in a way. Again, that particular person committed fraud, and insurance companies, of course, will want to stop any particular fraud. So let's get into some of the legal aspects, of course. First of all, let's talk about the law. Now, the law was passed in 2013, which you might be aware of. In 2013, it tidied up the definition of death for life insurance policies. First of all, if somebody's died and the doctor's been there, or there's a post-mortem or something, that's pretty easy to establish the cause and date of death. But if there's no body, then that, of course, is an issue, isn't it? And if there's no body, they will look for substantial or circumstantial evidence of the body. A plane crash, for example, the person might have died on a plane, so they'll look at circumstantial evidence of the plane crashing and the person's name being on the roster going in. But you do have this 7-year rule still kicks about. In other words, if a body or person's not been found for 7 years, they are presumed to be dead. Sad that, but that tends to be the rule. So if somebody's disappeared, for example, they'll wait 7 years before they can assume the person's dead, and then of course life insurance will then pay out, because insurance companies, of course, are really worried about any fraud as well. Obviously, cause of death comes into it as well. It may be investigated. The cause of death might be excluded, you see, from the policy. For example, suicide. Under insurance law, you can't actually benefit from your own action. Therefore, suicide is not a allowed cause of a life assurance claim. And many policies have suicide clauses built in. It might be a suicide clause for maybe a year on inception, but you've got to take a look at those areas as well. Now, when the death benefit or death claim is made, you need to have proof of title. In other words, the people making the claim, the lawyers, the executors, the administrators, have to have proof of title that they are entitled to the money. And that, of course, comes down to the grant of probate and the probate or letters of administration, whatever's been issued. which of course can then be given to the life insurance company as proof that the money should come your way because you're administering the estate of the deceased. So you remember those things, don't you, as well? If the policy was in trust, of course, details of the trust documentation or the confirmation of trust needs to be provided so that money is paid to the trustees of the trust, and that's of course where a lawyer would come in mind as well. There are small claims. You probably come across, with the probate issue. If it's a small amount of money, it can be issued immediately without probate. So if it's a small amount of sum assured, the life insurance company may actually pay it out just on proof of death. Because, of course, if the policy's in one name only, the policy owner's dead. That's the whole point. So it's got to go to somebody else. So they need to have proof of that as it comes through. Simultaneous death often crops up. Worth mentioning this one. Always get questions on this one. So if it's a joint policy, who dies first? So if it's a joint policy and both die in a car crash, for example, who dies first? It's therefore assumed the oldest person dies first. That tends to be the assumption that they made. That's important, of course, if you've got a joint policy or life of another or something like that as well. So that's a question I always get asked on training courses as well. And the insurance company will then pay out. So quite an interesting topic area for you, really, which is rife for fraud and loads of examples and stories of situations when people go into debt like our insurance broker friend. They'll do anything to get their money. I hope that's been useful. Bye. All right, okay. Let's move on then and talk about some sales skills and some business getting skills for you. That's a bit of a technical update for you as well. Now, the first one I want to talk to you about is a subject called boosting your sales efficiency. I call this one boosting your sales efficiency. Now, you're a mortgage broker or a financial advisor, and you're really, really busy. You might work for yourself, for example, or part of a small team. So here's 4 ideas to help you to boost your productivity. The first one is BANJO, which stands for bang a nasty job off. The whole point about BANJO is you do the worst job first in the morning before your day starts. BANJO, I like that one now. Another acronym for you, OHIO, only handle it once. I love this one as well, particularly useful for emails as well. If you read an email, deal with it or delete it or handle it, whatever you need to do. Only handle it once. I like that one. Number 3 for you is Pomodoro. Now, Pomodoro isn't an acronym, jolly big one if it was. Now, Pomodoro is apparently it's Italian for tomato, I believe, but it's a time management technique. And what you do here is you spend 25 minutes of a burst of energy on a particular project you're doing. Then you take a 5-minute break. Then you come back for another 25-minute burst of energy on a project. Then you take a 5-minute break. Then another 25-minute burst and a 5-minute break. And you carry on all day like that if you want to. The 5-minute break's really important because it gives you a breather, and then you can carry on a full energy pelt. Interesting, isn't it? 4th one for you, NTD. Is it a nice to do? Is the one, or is it a need to do? That was the first time management technique taught to me years ago. Is that what you're trying to do nice to do because it's enjoyable, low pressure, low stress, or is it a need to do as part of your objectives? Okay, let's get on to another technique for you, or some more sales ideas, skills for you. This one are some insights for you, my 5 insights. I'm calling this the mortgage advisor's direction of travel over the next few years. 5 insights for you, which I want to share with you. Insight number 1 is mortgage and protection advisors who are actively involved in the protection market are really enjoying it. They're loving the fact finding, the lifeline. They're loving talking to their clients about protection needs, and they're recommending protection products as well. They're also enjoying the fact that they go back and see the client 6 months later or 12 months later. They have a proper client bank now in which they're able to look at all the needs or the protection needs of that client. In other words, they've experienced financial advising and they're liking it. That's a fantastic insight for you as well coming through. So many people want to carry on doing that. Insight number 2 for you, the FCA. Now, the Financial Conduct Authority, of course, are constantly worried about the protection or the advice gap. There's not enough financial advisors to go around. So they've been trying to work on this simplified advice regime. And it's coming forward, then being pushed back a bit, and coming forward and pushed back. But it's happening slowly but surely. And the last incarnation is the advice you give is based upon what typical clients in your situation would always buy as well. So people like you in your situation took these products out. It's almost like buying things from Amazon, where you buy something and then they tell you that somebody else bought this product as well. We're witnessing simplified advice given at a fraction of the cost of complex advice financial advisors work to ordinary people like you and I. That's the change that the FCA are bringing in, and it will happen because they're keen to make it happen as well. Insight number 3 for you. There's a lot of mortgage people or people who want to become mortgage advisors bubbling. The market for people taking CMAP has taken a dive over the last few years. There's quite a lot of people coming in now who have got a secure job somewhere. They're earning good money to pay their bills. And they're taking their CMAPs slowly. They're time rich, you see, cash poor. So they're taking their CMAPs very slowly, and they will qualify in the near future. So when the mortgage market picks up, there'll be a lot of people looking for positions available to them. Number 4 for you. A lot of boomers and Gen X's, particularly the early Gen X's, are approaching retirement now, or the time when they think they want to retire. COVID made them think about it. Many realised they couldn't do it. These people are ordinary folk, like you and I, who've got pension pots, sometimes more than one, and they really don't know what to do with their pension pots. They're reticent to go to a full-blown chartered financial advisor for advice because of the cost implications. But they can get information online, of course, the likes of Money Supermarkets and Martin Lewis and people like that. But they can't get individual advice because there's no avenue for that. So that's an example where there's a demand for simplified advice without the costs incurred of complex advice situations. Last one for you, number 5, mortgage advisors. Many have pivoted over to specialist lending in the last few months or year since the buying homes, first-time buyer market dried up. Now, specialised lending is for bridging, seconds, development finance, that sort of thing. And they're realising that the customers that they talk to is a very different sale to a personal customer. Essentially, specialist mortgage advisors talk to business owners, business people, entrepreneurs, people who run businesses, because they're developing and bridging and renting and those sort of things. It's a different sales process to dealing with an individual. It's B2B, not business to consumer. It's a different sales process. Some are grasping it, some are not. Therefore, it's just changing the way they operate. So where does this leave us then, all these insights? Where does it leave us for 2025? Well, I think the housing market will rejuvenate. It always does. It's cyclical, whether it will be after the election, into the autumn, maybe next spring. But it will, and there's a pent-up demand of people who want to buy property or move or whatever it is. Now, I think mortgage advisors can slip back into what they used to do 2 years ago. In other words, dealing with lots and lots of different people, new business coming in all the time. Next customer, please, a bit like the supermarket, isn't it? Or they can pivot their business model into more of a financial advising, protection advice model, which will allow you to operate in a very different way. The thing about financial advice models is they don't have that cycle. Pure mortgage, ups and downs all the time. Financial advisors don't have that issue so much. It's a constant stream of income that they receive. I think mortgage advisors will either go back to doing what they were doing before, or they will pivot to the new model of financial advice. There we go, some insights for you. Just makes you think about what may or may not happen as we move forward. Okay, let's wrap up our mortgage live stream today and leave you, as always, with my member list details. So if you want to get onto our member list, remember, during August, I've got 4 or 5 videos I'm running, live streams, on how to switch over from mortgage advising to financial advising. You might be interested in those. So make sure you get onto that member list if that's of interest to you. Won't be here next week because I'm off to see my dad. I'm off to see my dad in France, so I'm going there for the week. So I shall not be doing it from where he lives. He doesn't quite have the broadband speed for that, so there'll be one the following week as well. So my daddy's 87 now, I think. So he's going to see how he's getting on because life changes at that sort of age, isn't it? But anyway, other than that, I'll wish you a fantastic few days or week, whatever is your cup of tea. Enjoy the weather, enjoy what it brings for you, and I'll see you in a couple of weeks. Bye.